Hi, today I'm going to discuss HUD's program to buy multi-units. They actually have a couple programs. They have one for purchase and refinance that I'm going to discuss right now. And they have also a rehabilitation loan. Now, I would compare these loans on the residential side to the 203K program is the fix-up loan, and the 203B program is their purchase and refi program. But in this case, since we're doing the multi-units, the program is called the 223F program. So you can Google that program, you can get all the information for it. What is that program? If you have 5 units or more, because it's not anything less than 5 units, it's a program that you can purchase or refinance the property. It can be a good loan, and it might not be a good loan for you. I'm going to discuss all that here in a second. Now, the first thing is you need to know what your debt service coverage ratio is. And I'm going to tell you that right now. I'm going to come over here and see it says debt service coverage ratio. We call it DSCR for short. Now that right here is your net operating income, and you divide that by your total debt service. Okay, on other videos we've discussed the net operating income. I don't want to discuss that now. But an example of this is if you have $100,000 in net operating income and you have a total debt service, that is your payment back to whoever the lender is $80,000, you would divide that number and you come out with 1.25%, which shows that there's plenty of cash flow in the property to cover the debt service. Okay, what are some of the advantages that we have for using that loan? First of all, the loan to value ratio is the highest in the market. It's 83.3%. I don't know where they got that number. It's kind of a weird number, but that's what it is. They also have fixed rate loans up to 35 years. As you know, most residential loans will go to 30 years. This is a 35 years, so theoretically it keeps your payment down a little bit less. And it's fixed rate. There are no adjustable rates. It is also a non-recourse loan. What that means is the liability is on that subject property only. They're not going after any other properties or your stock accounts or anything other assets that you might have. Okay, assumable loans. Most loans are not assumable when it comes to multi-units, but in this case, the government allows you to assume the loan. However, it used to be if you could breathe and fog a mirror, you could get the loan, but nowadays it's not quite that easy. You have to fill out paperwork, send it into the lender, they have to approve you, which usually they do, because it's already insured. Now, one thing I would like to point out real quickly is HUD does not give loans. HUD only insures loans. So you have to go to a regular lender. You will get the loan from them insured by HUD. The reason why they will give you that loan is if you don't pay them, HUD will. There's also a small amount of repairs that they will let you do. I believe it's $6,500 now that they'll let you do with. However, there are disadvantages, and I'd like to get into these because some of them are pretty big. First one is it's a longer processing time. It takes 6 to 9 months. I don't know about you, but I like to close my deals a lot quicker than 6 to 9 months waiting for a lender. They also have higher fees than conventional loans. The mortgage insurance premium. Now this can be pretty stiff. You have an upfront premium and you have an annual premium, and they're very stiff. Next would be you have annual auditing of your operating statements. The government comes in every year and audits you, so you better keep your paperwork together and correctly. They also have companies that come in and make sure before the audit that you have done all the paperwork correctly. The next is the replacement reserve escrows. They require you to keep money set aside. So if something, new roof needs to be put on or whatever, there's money to go in there and solve the issue. Next is your HUD inspection reports annually. They go out to the property every year and check the property out. They are very property conscious. They want to make sure that the tenants in the building don't have any issues. And next out is you have cash out restrictions. They'll usually only allow you to go to about 50% cash out. On a conventional loan, you might be able to go a little higher, but that's how they protect themselves. That's basically the program of the 223F program. And it's a good program for some people. It's not a good program for other people. I happen to like it. I like the 35-year fixed rate with the assumable terms. I'm Floyd Brown, and if you need to know any more information, you can go to my Facebook page and check out all the stuff there.